It's only entertainment.
Back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to take a look at a pitch deck review with Greenlight. To help us do that, Katrina, Glogowski, angel investor and attorney. Thanks for being back on the Talking Hedge.
Thanks, Josh.
All right, 30 slides. We're going to get through this fairly quickly, but ultimately what we're going to do is give it a score, a score out of 7. Is it going to, number 1, identify business plan goals? 2, do they know their audience? Number 3, will they understand the market, or at least tell us they do? Number 4, will they identify needs and roadblocks? 5, do they know what sets their business apart? 6, are they going to introduce the team and products? And 7, will they create a summary with a call to action? I don't know. Let's find out. All right, Greenlight. So they're building one of the largest vertically integrated multi-state cannabis operators in the Midwest. It's led by a team previously built and sold cultivation, retail, and distribution assets to a large public acquirer for about $100 million.
And why do they need my money, Josh?
That's
$100
for you.
million exit?
Well, they want you to be able to get in on the ground floor of this next opportunity. So with their founders, investors, state-based partners, they've contributed $7 million of equity to date. And they're going to pledge $15 million of capital to be used primarily for the build out of their physical infrastructure. So in Missouri and Arkansas, they've established formidable license positions with 20 licenses in Missouri, 4 licenses in Arkansas. So they're vertically integrated in Missouri. That's great. So they can be a producer, processor, or retailer. And to complete the build out in Missouri and Arkansas, companies seeking to raise $10 million in financing. So some of the investment highlights: the founders have 25 years experience. Looks like they have 400,000 square foot, 80,000 plants, and multiple manufacturing and dispensary facilities. Their founders, they sold Acres Cannabis of Nevada and Eureka Cultivation of California. Both sold those to Curaleaf for about $100 million.
Oh.
So they have a dominant market position. So with 20 licenses in Missouri and 3 in Arkansas, they're going to look for a 4th in position to build a dominant dispensary brand in both states.
Okay, that's good.
All right. So Missouri, they have 65,000 medical marijuana patients. Arkansas, they're on track to exceed 2.2 million monthly average. 2.2 million. It's not a lot, but it's a good start. So the opportunity here with Greenlight. So they've contributed $7 million. We mentioned that. And they're going to provide $10 million in financing. Mentioned that. All right. So they mentioned some of the management team here. So we've got some names and bios here.
We like to see that. That's very good. We can look up these people. I'm very happy about that. There does appear to be some previous cannabis experience, and that's very good.
Decent blend of men and women. Not sure about backgrounds or anything, but yeah, all that is there. So got some articles here about their acquisitions with Curaleaf. Development timelines. So going back to 2019 in Arkansas. And then last year with some crops planted. They've got some letters of intent, which mean nothing. And then a sale of 1,600 pounds to somebody in 2021. All right. Some of the business highlights. So here's some good numbers: 70,000 square feet of retail space, 200,000 of cultivation. Got 1 production facility, 3 cultivation, 20 dispensaries, 65 employees in 2 states.
I like that they have some of this built out already. This is a little bit more than an idea, Josh. Let's see if they have any sales.
Yeah. So kind of just repeating them. So it's a 30-page slide. So this is more overview that's basically repeated the same information at least. This is the 3rd time I'm seeing this. We're going to skip that. Talks about their ownership structure and some regulations.
I like that. Talk about roadblocks and how they don't discuss roadblocks. So this is very good.
So each resident is allowed to own a maximum of 5 dispensary and 3 cultivation licenses, somewhat similar to here in Washington. But non-residents, they can actually own 49%, whereas in Washington, I think is it still 10%?
It's pretty low, Josh. Yeah.
Yeah. All right. So the Missouri market, I think we mentioned a lot of that. 650 million by 2024 is the estimate. Some decent projections there. Missouri marketplace projected medical cultivators at 28. That's better than the 7,500 in Oklahoma.
Yes. These are very useful slides, Josh, and it shows me that they are really paying attention to the market, which is important. We look for that. I'm still waiting to see if they have sales, Josh. We're on slide 14.
Right. Yeah. If Oklahoma did a deck like this, nobody would ever make that, because they would say, oh, you know what? I think we have too many cultivators, too many licenses. I mean, just look at Oregon and what happened there. So this is looking fairly decent. Talks in detail about their licenses in Missouri with operations, some of their locations, talks about cultivating, and finally get to some of the brands here, some of the in-house brands and third-party wholesale opportunities.
I like that. It looks like they have actual dispensaries. They're built out. We see square footage. I don't know if these are conceptual drawings, but they have some stuff going on here.
Right. It talks about how they're going to brand these stores. Getting into Arkansas marketplace. This is a nice little graph about total amount sold. Looks like 3,000 pounds at an average of, oh no, that's not average. That's 21.4 million, maybe. Hard to say. So it looks like they're surpassing 21 million. And since the start of legal sales, patients have spent 143 million in purchases, over 22,000 pounds of medical marijuana despite a pandemic. Not too shabby. All right, rolling through some of the Arkansas locations and the branding of the retail stores.
Okay.
Talking again about the ownership structure, really laying that out.
Okay.
All right, we get into the deal structure. So 10 million senior secured debt. So looking at a multi-tranche closing, providing first lien on all assets. That's good. Funds are going to be loaned, in which will turn, there's going to be 15% rates, principal balance, balloon payment.
Well, this is good. I like to have the deal terms set out. I really like, I like that a lot. I am very concerned that they are going to use this money to build the dispensaries. So we're on deck 28, slide 28, and this is the first time they're telling us that they're not actually in business yet, Josh. These are all plans.
All right, we got there eventually. So the use of funds, 3.8 million is a Missouri build out, 2 million partial payment to Curaleaf. Oh, great. 2.1 million is for Arkansas, and then 2 million in working capital.
Yeah, what concerns me there, Josh, is the slide 28 finally discloses that they're not operational and that they have to pay back somebody else for these licenses.
Right.
That's concerning. It can be valid. There can be valid reasons for that, but it's also very concerning. This is not an operational company, Josh.
I had red flags as soon as they had the deal structure. This is like the sixth, one of these slides, slide 26 is like the sixth time they talked about the structure. So I knew that when you put that much in there, you need to do your due diligence, because they're trying to tell you something without telling you. Straight up right there. So looking at the pro forma financials, all of these are estimates. In 2022, they think their total revenue is going to be 104 million. Maybe. Depends on how much they owe other people. With a lot of these sale leaseback options, you're going to have to dive into that and find out exactly what the bottom line is. So with that, let's check and see if they meet our 7 tips to a successful investment deck. Number 1, did they identify the business plan goals?
Yeah, they want your money to go get some licenses and build some buildings. So yeah, they did. They get a point.
And do they know their audience?
I think they know the Missouri and Alabama cannabis markets extensively because they gave us about 14 slides about the total addressable market and the sales figures out of each one of those states. Their investor audience, I don't know that they did a very good job there, Josh, so I'm going to give them a half a point.
How about understanding the market?
I do think they understand the market, which gets back to the 14 slides that they gave us about the projected markets in Missouri and Alabama. So I'm going to give them a full point there, Josh.
All right. I saw that they, for identifying needs and roadblocks, they have needs, but I didn't see any issues or roadblocks. You're going to give them a full point?
Well, they did talk about pending legislative changes in both Missouri and Alabama. So I'm going to give them a point there. They did better than a lot of the other pitch decks we see about identifying their needs and roadblocks. But what I didn't like is none of these structures are built. Are there zoning regulations? Do they have to have public hearings in order to erect these structures? These types of things. I'm going to give them a half point, Josh.
All right. What about secret sauce?
I like that they're vertically integrated. We talk about this frequently. It allows you to control some of your costs. They have some brands and they have, it appears from their pitch deck that their team has a lot of experience in cannabis, which I like. Is that enough to set the business apart? I don't know because they didn't talk about any of their competition in either Missouri or Alabama. There's existing sales, and they told us there was existing sales data in these states, but they didn't tell us anything about their competitors. So I that's a pet peeve of mine. You need to address your competitors. So I'm not going to give them anything there, Josh.
They introduced the team and they had some products. Is that enough for a full point?
Yes.
Number 6. All right. And 7, they kind of created a call to action at the very end. Is that enough for a full point?
Well, they did have an ask, and they did explain the ask. They set out the terms and what they wanted and what you were going to get for these your $10 million. So that's good. I like that. So yeah, I'm going to give them a point.
Too shabby. All right, that's 5 out of 7. That's going to be a 71%. So not too bad for these guys at Greenlight. Assuming they can make any money at all right now. I mean, it is medical. It is in one of these states where you might be able to get away with that. We'll have to find out.
Yeah, we'll see. I wish them luck. I think that they'll be able to transfer their California experience into these states and to clean up the pitch deck, just talk about your competition a little bit more and not spend so much time on the total addressable market of Missouri and Alabama and talk about your share of the market and what you think your share of the market will be. That would have garnered them some more points from me, Josh.
Yeah. Less information about the local market, more about performance and what you are going to do, especially if you're estimating what you think you're going to do. I want to know even more since you're not already in business. It's 2021. Feel like a lot of these companies obviously have to start from somewhere right now when they're getting brand new regulation, but it better come from a team of experienced folks. And this one obviously has. So they've been there, they've done that. We'll just have to wait and see how this works out. With that, we're going to roll this one up. I want to thank my guest, Katrina Glogowski, angel investor and attorney. Thanks for being back on the Talking Hedge.
Thanks, Josh.
I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.